Hey Bowtie Nation, Joseph Hogue here, and reading through the comments on the channel and in our Facebook group has always put me in the unique position to hear how investors are feeling, what they want. And right now, investors just want that chaos and the uncertainty in stocks to be over. With the stock market down 10% from its February peak and the popular stocks like Nvidia and Tesla down even further, bear market crashes of 20% in just a few months, investors are rushing back to the safety and the cash flow of dividend stocks. And for that, I've got just what you're looking for. 5 dividend stocks you can count on in any market. The 5 stocks I'll highlight not only produce nearly 5% annual cash yield, but also see smaller ups and downs than the market, with earnings so stable they make Warren Buffett's wardrobe rotation look edgy. I'll show you how to find the safest dividend stocks later, but let's get started with an ETF, the Franklin US Low Volatility High Dividend Index Fund, ticker LVHD. Now that 3.2% dividend isn't spectacular. In fact, one of our dividend stocks is going to more than double that cash payout. But there are 2 reasons I'm starting with this ETF. And first is, as a fund of 100 plus low volatility dividend stocks, you're not only getting safer stocks, you're also getting the safety of spreading your money across all of them. So this one is going to be safer than any one single stock. The fund screens those 3,000 largest stocks in the US for those profitable companies with the highest sustainable dividends, along with the lowest earnings volatility. That earnings volatility is key here, and something I'll show you how to find later. The stock prices and how much investors pay for a stock are based on those earnings, and a company that can report earnings growth year over year without the hiccups of a recession are like a lighthouse in that 2025 market hurricane. These 100 stocks are focused in traditionally safe haven sectors like consumer staples and utilities because companies in those sectors sell things we have to buy, and their earnings are extremely stable. But it's also got a mix of stocks in other sectors for that added diversification and some growth. The LVHD has helped save investor portfolios this year with a 1% gain on top of that dividend. And while it might not be exciting, neither is living off ramen noodles while your Lambo dreams crash into reality. But here there's another reason I wanted to start with it on our list as a way to reverse engineer our list of safety dividend stocks. We know all these stocks have already been screened for those sustainable dividends and stable earnings. So we can go to the Portfolio tab here in the menu and see all the stocks held in the fund by downloading that list. Here we've got bellwether stocks like Coca-Cola, Johnson & Johnson, and US Bancorp from which to start our research and then pick out the best. We're just getting started on our list of dividend stocks that won't let you down, but first, I want to thank our sponsor for today's video, StoryWorth Memoirs, one of my favorite ways to capture and share memories with family and loved ones. As some of you out there know, my mom passed away about 8 years ago. At the time, Michael was only 4 and Samantha hadn't even been born yet. Thanks to StoryWorth, though, I was able to preserve her stories and life in a book, and now the kids have a way to know their grandmother, feeling a connection to someone they never got a chance to meet. Here's how it works. You can buy StoryWorth for yourself or a loved one. StoryWorth will email the storyteller one question each week about their lives. Capturing the stories is easy, simply by replying to an email or even recording it over the phone. And at the end of the year, these stories, along with the photos you add, are bound up in a hardcover book. You can see my book here. I filled it with all the memories I had, but the StoryWorth prompts were super helpful in bringing up other memories and being able to fill it out in a complete picture. I remembered things I hadn't thought of for years and got to review old family photos, all of which was really fun to relive. I'm going to leave a link in the description for an exclusive $10 off, or you can scan the QR code in the corner. Check out StoryWorth. It's been such a great experience for the kids. I'm giving it to others in my family, and with Mother and Father's Day coming up, could be the perfect gift for a loved one. Back to our list though, and this first individual stock is one we've covered on the channel before, VICI Properties, ticker VICI, with its 5.3% dividend yield. Now, VICI owns 93 properties across gaming and experiences, including some of the biggest names in Vegas, like Caesars and the Venetian. The company owns properties in 26 states and all triple net leases, which means the tenants pay all the costs here. VICI just collects the rent. The company has grown its dividend payout by 7.9% a year, well above the 2.2% average dividend growth among REITs, and has beaten the S&P 500 market index by more than 22% this year on top of its dividend. Gaming and experiences spending has kept up with strong consumer spending, but I'm a little more worried for this one than the others. It's still a great long-term dividend stock that will put cash in your pocket, but a recession would hit this one harder than others on the list, so that outperformance might not be quite as strong. Up next though, Johnson & Johnson, ticker J&J, may only pay a 3.3% dividend, but is arguably the safest and most reliable here, having increased its dividend payout for 63 consecutive years. After the recent spinoff of Consumer Health, the company is leaner and more focused, with 63% of sales from pharmaceuticals and 37% from medical technologies. It's increased the dividend at a 4% annual pace, which is easily sustainable on the 4% annual sales growth in each segment, It could get a bump higher with the payout ratio, the amount of earnings paid out to cover that dividend, just 47% on this year's expected $10.58 per share earnings. J&J could actually increase its dividend faster at a 5% pace of earnings growth and still not have to worry about sustainability. With drug makers, the pipeline of products is always the most important thing, and here we see strong optimism on the part of management, estimating that sales for key drugs could be 2 to 3 times higher than the current market forecast. That should help J&J continue its strong run, already beating the S&P 500 by almost 20% this year, making that 3% dividend just icing on the cake. We've still got 2 more of the safest dividend stocks, 2 with yields of 5 and 7%, but I wanted to show you another way of finding these beyond picking them out of that ETF and then analyzing them to find the best for your portfolio. And while that low volatility ETF screened for earning stability, you might not have access to that data, so I want to show you a quick screener to find these. You'll first want to start with the market cap, the value of all shares issued, and I like to filter for only those largest companies, those over $2 billion, sometimes even only those of $10 billion or more, so I know I'm starting with those with the financial power and scale to survive any economy. I'll also filter here for dividend yield because, well, it wouldn't be much of a dividend stock without a good payout. Now, normally, I'm not interested in a dividend stock with a yield under 3% because anything under that just ain't paying the bills. But the way Yahoo Finance Screener is set up here, we're going to filter for stocks paying a 4% or better dividend. Then, to see only the stocks traded on the US exchanges, I'll toggle to filter for only those on the NYSE or the NASDAQ exchanges. You might expand this to the OTC stocks or whatever exchange is easiest for you to buy or sell from, but these are the majors. Finally, and most importantly, since we don't have that data for earnings sustainability, we can use this measure of beta to find the safest stocks. Now, beta measures the average price swings in a stock compared to the overall market. If a stock's price tends to rise and fall more than the market, then it's going to have a beta over 1.0, while those that tend to be more stable, less volatile than the overall stock market, those are going to have a beta of less than 1. So here we're going to toggle for those with a beta of 0.8 to 0.2 over the past 5 years. And just by eyeballing this list, you can see it worked, leaving us with some of the largest and most stable companies in the market like Philip Morris, Shell, and Pfizer. Companies with high and sustainable dividends that don't typically see those big changes in the stock price when the market crashes. Now from there, you can compare the stocks on all the fundamentals we talk about here on the channel, like payout ratio, cash flow, and debt coverage, but I want to get back to our list. So the easiest way to see if you can count on these the most is just to see if it's done what it's supposed to do, holding up in a market crash. You'll want to compare how they did in more than just one market crash, but here we can see that all 5 have outperformed the market, the S&P 500 index so far this year, and 2 have beaten it with 20% on top of their dividends. Back to our list, and this is the only stock down for the year, Chevron Corporation, ticker CVS, but I had to include my favorite safety name in energy with its 5% dividend yield. While I also like some of the smaller players like Diamondback and Devon Energy, Chevron has the unmatched scale and the financial power in the industry, along with that focus for investor cash return. Not only does the company produce a higher return on investor money, seen here in the improvement in return on capital expenditures or ROCE of nearly 8%, well above its peers in the group, but Chevron prioritizes shareholder cash return. It's increased the dividend by 5.7% a year over the last 5, well above the increase by the other majors, and has grown that dividend for 38 consecutive years, putting it easily on the exclusive list of dividend aristocrats, companies that have increased their payouts for more than 25 years. We also see that it allocates more of its cash to dividends and buybacks, spending 58% of free cash flow for shareholder cash return versus just 46% for its competitors. Now, the price of oil has dropped on those fears of a recession, driving a 5% drop in the shares, but that earning stability is still helping CVX outperform by nearly 5% for the year. This next dividend stock is beating the market by more than 20% this year, and that's without counting the 7% dividend yield. But as much as I like these 5 stocks, I don't like waiting 3 months for my quarterly dividend payments. Check out the video in the corner here next for the monthly dividend stocks beating the market crash this year. 5 monthly payers beating the market by 20% or more. Now, this next one is going to be controversial, but it's hard to deny the earnings reliability of Altria Group, ticker MO, and its very high 7% dividend yield. The U.S. tobacco company is the market share leader with its Marlboro brand, and despite a years-long drop in cigarette volume, the company has leaned heavily into smokeless and oral tobaccos to stem that loss to just a 1% revenue loss over the last 3 years. And then for resilience around short-term market chaos, it's hard to beat this industry. This is basically the ultimate recession-proof stock, and Altria has used strong profitability improvement to turn that downtrend in sales into a 4% annual earnings growth, sustaining the 4% annual increase in the dividend. The company has increased its dividend for 55 consecutive years, putting it on that Dividend Kings list. Companies that increase their dividend for more than half a century. And this year, the shares have outperformed the market by more than 22% plus that dividend. Look for the link in the description for that exclusive offer, $10 off StoryWorth to capture and share memories with your family and loved ones. Or click on the video to the right for those 5 life-changing stocks to buy right now. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.